This new law could put thousands of dollars back in your pocket, but only if you understand how it works. There's a fresh $6,000 tax deduction for seniors, and it might just change how you file this year, but not everyone qualifies, and if you miss the fine print, you could lose out. Let's break it down. Congress passed a massive bill, over 900 pages long, that's quietly rewriting parts of your tax return. Inside it is something called the senior bonus deduction. In short, if you're 65 or older, you may be eligible for a $6,000 deduction that lowers your taxable income. If you're married and both partners are 65 plus, that could mean $12,000 sliced right off the top of your tax calculation. This isn't a refund. It's a reduction in your taxable income, which lowers how much you owe. What's unusual is that it applies whether you take the standard deduction or itemize. So it stacks. Even if you have big deductions like mortgage interest or medical expenses, you still might benefit from this bonus. And here's a big one. You don't need to be receiving Social Security to qualify. Whether you're drawing your benefits now or delaying for a bigger payout, this deduction applies just based on your age and income. But age isn't enough. There's an income limit, and if you're over it, you'll see this deduction disappear fast. Let's look at the thresholds. For single filers, below $75,000 MAGI equals full $6,000 deduction. Between $75,001 and $175,000 equals phased out. Above $175,000 equals no deduction. For married filing jointly, below $150,000 MAGI equals full $12,000. $150,001 to $250,000 equals phased out. Above $250,000 equals no deduction. The phase-out uses a strict formula. You lose 6 cents of the deduction for every $1 over the threshold. Example 1. A single filer earns $95,000. That's $20,000 over. 6% of $20,000 equals $1,200. Lost. $6,000 minus $1,200 equals $4,800. Deduction. Example 2. A married couple earns $200,000, $50,000 over. 6% of $50,000 equals $3,000 lost. $12,000 minus $3,000 equals $9,000 deduction. Cross the upper threshold and it's gone entirely. No partials, no appeals. This isn't just your salary. The IRS counts a wide range of income toward your MAGI. Here's what gets included: wages, pensions and IRA distributions, dividends, capital gains, rental income, taxable portion of Social Security, business or freelance income, alimony received, tax-exempt interest like municipal bonds. Plus, here's the surprise. Some income you might have excluded in the past gets added back in for this calculation. Foreign earned income exclusions, U.S. territory income, housing cost exclusions for Americans living abroad. Even if you didn't pay taxes on those amounts before, they count now. So if you were near the cutoff, these little extras might tip you over and cancel your bonus. Here's where the math kicks in. Your provisional income determines how much of your Social Security is taxed, and that can affect your MAGI. Here's the formula. Adjusted gross income, line 11 on your 1040. Tax-exempt interest, line 2A. 50% of your Social Security, line 6A, equals provisional income. This number is key. Let's look at the thresholds. For single filers, under $25,000, 0% of Social Security taxed. $25,000 to $34,000, 50% taxed. Above $34,000, up to 85% taxed. For married filing jointly, under $32,000, 0%. $32,001 to $44,000, 50%. Above $44,000 up to 85%. For example, pension equals $30,000, Social Security equals $30,000, 50% of SS equals $15,000, provisional income equals $45,000. Annoyed? That puts the taxpayer above the highest bracket, meaning 85% of Social Security income becomes taxable. That added tax pushes up AGI, which flows into MAGI, which may reduce or eliminate your senior bonus deduction. Let's talk strategy. The IRS gives everyone a standard deduction. Then seniors 65 plus get an age-based bump. Now, thanks to the new law, seniors get this $6,000 bonus too. Here's how they stack. Standard deduction for singles equals $15,750 after 5% boost. Senior bump equals $2,000. New bonus equals $6,000. Total possible? $23,750. For married filing jointly, standard equals $31,500. Senior bump equals $3,200. New bonus equals $12,000. Total, $46,700. These figures can shift your taxable income downward dramatically. In many cases, it drops taxpayers out of the 22% bracket and into 12%. That's not a small difference. Also, keep in mind that many retirees who used to itemize for mortgage interest or large medical expenses now find the standard deduction with these age-based boosts more attractive. This law makes the standard deduction even more powerful. So, if you haven't reevaluated your filing method in a while, now's the time. The right approach could unlock serious tax relief. Let's compare two scenarios for a single filer. Before the law, AGI equals $70,000. Standard plus senior deduction equals $17,000. Taxable income equals $53,000. Tax owed, approximately $6,574. After the law, same AGI, new deductions equals $23,750. Taxable income equals $46,250. Tax owed, approximately $5,311. Net savings, $1,263. Now for a married couple. Before the law, AGI equals $100,000. Deductions equals $33,200. Taxable income equals $66,800. Tax owed, $7,539. After the law, same AGI. New deductions equals $46,700. Taxable income equals $53,300. Tax owed, $5,900. Savings, $1,639. This is where real people feel the difference. At the pharmacy, at the grocery store, during holidays with their grandkids. When can you claim this? Starting with 2025 tax returns, filed in 2026. It's temporary. The deduction is only approved for 4 years. 2025, 2026, 2027, and 2028. If Congress doesn't renew it, it's gone after that. Also remember, it's not refundable, meaning you won't get a check for it. It just reduces how much of your income gets taxed. So, if your total income is very low, you may not feel the benefit as much. Still, for most middle-income seniors, the ones with pensions, modest investments, or part-time jobs, this change could be worth hundreds, even thousands. This law could be a game changer for millions of seniors, but only if you know how to use it. If you've got parents, relatives, or friends approaching retirement, share this video. Let's make sure no one leaves money on the table. And if you've still got questions about your situation, drop them in the comments. This stuff is confusing, but we're in it together.